Back to stocks here for a moment. Rally mode, at least to end October, which has been a brutal month for equities. General Motors is one of the ones we've been watching on the strong earnings that came out this morning. Dow's up 200 plus. GM is up almost 8%, a $2.60 gain in the stock price today. Now, big picture earnings season. You want to look at earnings per share, you're going to get good figures, right? Almost 80% of the S&P 500 companies reporting. 79% have beaten third quarter earnings estimates. Aaron Gibbs is here, so is Susan Lee, to talk about all of this with us. And Aaron, we had Facebook last night after the bell, and we were talking about it when it came out. It was interesting because the stock sold off initially, and then it came back. So we were wondering, is that Facebook specific or maybe some sort of a turning point in markets, or how do you read into all this?
You know, recently, earnings season, really, the individual reports have not mattered so much. And when you go through these periods of high volatility, particularly with these sharp down days and then a rebound day, what really overtakes is the overall sentiment towards the market and not the individual stock reports. And we've seen that throughout earnings season. Some days you have a great report and your stock still tanks. Today the market is up a lot. And so just looking at Facebook's beta, we would expect it to be up, above the market value, which is exactly what's happening. So for us, when you're in these super volatile environments, correlations across stocks sharply rise. Everybody kind of just acts the same way. And this is sort of expected. And so we're really happy that most stocks are going to be up today.
On this, right, today. On this,
today.
Just paying attention to the tense that Aaron was using in her commentary there, Susan, and saying when we're in this environment, not that we're on our way out of it or that we've turned some sort of a corner, because that's always what people wonder. You had a couple of days here, 400 points up yesterday, almost 300 today.
So when is the inflection point?
Maybe we're through whatever we were going through, but it doesn't seem like many people think that.
You know, her mentality, I think that's pretty much how the markets operate. But I think the all-important earnings report this week comes tomorrow night with Apple, especially since they're considered probably the most successful company in China. How do tariffs impact them? What about handset prices? Are they able to raise prices in this type of economy that we're in? I think that's probably all important for the markets to watch for.
So if we are turning some sort of a corner, maybe we turn it after Apple, or we turn right back to where we were and stay in this very volatile environment.
Yeah, and, again, it's a reflection on the strong dollar environment that we're in as well. I mean, for corporates, that's all they've been complaining about on the earnings call: strong dollar, higher interest rates, and China global trade tensions.
And tariffs, right.
Yes.
Give us a preview of what we should expect tomorrow night.
So I think overall we're starting to hit that level where we've really flushed out the excess valuation. A lot of this was investors getting used to higher interest rates, higher cost of capital. It's going to be tougher going forward. People are starting to look into 2019 and seeing a deceleration.
By the way, and just to get this point in there, unless you disagree, not the midterm elections necessarily in some sort of fear, because the president's brought it up a number of times, and we've tried to say that most of the people we talk to say it's those factors you're talking about rather than Dems taking the House or anything like that.
Exactly. In fact, if the Dems take the House, that actually typically is good for markets, because if a deadlock actually is good because it means no change.
Right, the gridlock.
Gridlock
is good for
Gridlock
markets.
is good because it means there's a lack of change, and then markets can just sort of operate on the status quo.
So I'm sorry to interrupt your earlier thought, but are we now comfortable with those issues?
We're getting there. Like right now, when you look at valuations, we're close to 5-year low valuations. Stocks do not look overpriced. They're starting to look cheap. And so for us, I think going forward into November, we might, at least at the end of earnings season, it might be a little more stock specific. You can really pick and choose. We've also seen a switch from growth into value, with value being more of a leadership as people get a little more defensive.
Right.
And that could be something that we could also look forward to over the next couple of months.
And I think historically as well, whether over a 70-year period or a 20-year period, as long as we get the midterms out of the way, the 6 months afterwards, you tend to see some pretty good gains 6 months to a year
no matter
after
who
midterms.
Wins,
no matter who
right.
wins at that point.
Yeah, it's just instability causes market reactions, fear to rise, and so any negative news tends to be more negative and makes uncertainty. And we have, and on top of the fact that rising cost of capital.
Right, and that's a different environment. I mean, there's one of the things when we started talking about this, when we were started to talk about higher interest rates, a few people made this point, which I thought was interesting, but many of the people making decisions in terms of portfolio managers and also traders that are taking their cue from these portfolio managers hadn't really been through an environment like this. I mean, you can read about it, but until you're through it, it's almost you hadn't really traded your way through it. And, you know, Neil talks about this all the time. He'll say something like, well, when I bought my first house, the interest rate was X. Well, people that are making decisions now, say someone's in their 30s, 40s, even 50s, they haven't really lived through similar environments, or if they have, they weren't in the decision-making position that they are now. They were much younger in their careers, so it's kind of the first time through it as a big decision maker. I think there may be something to that. I don't know if you agree or not.
No, and certainly, I know we have clients where they are still allocated 100% equities, and they've been so dismissive of any fixed income, any bonds, because
the
yields were so. Yeah,
and so I portfolio manager.
Well, no. Our individual clients, like retail investors. So that's more in the retail investor
Well, they couldn't get any yield there for years.
Exactly. So and in our asset allocation program, we've always been well diversified. But I think, you know, as the retail investor starts to understand that there are benefits to fixed income, to the safety, particularly after this correction, that you might see some changes in mentality.
Yield is attractive in volatile times.
It is. Like knowing that you're getting 5% every year can be very attractive.
Very true. Thanks to both of you. Good to see you, Erin. Thank you, Susan. We'll see you again. Now